Hello traders, Greg here with a market update. Okay, so today was supposed to be D-Day when Trump gave the ultimatum to Iran if they did not open the Strait of Hormuz, that he would take them back to the Stone Age, or power plant day as Trump liked to call it. In any case, it seems like last minute diplomacy has won the day. So market is getting a lot of positive headlines at the moment. It seems as if that Pakistan has brokered a ceasefire between the US and Iran for 2 weeks, and that basically entails that the Iranians open the Strait of Hormuz for those 2 weeks in good faith. And over those 2 weeks, there is a 10-point plan that Iran has given to end the war. They're going to work on that. So all the signs are pointing that potentially this war is over. And so yes, it's the first time the market has had these positive developments, tangible positive developments since the war started. So obviously, averting the Stone Age, risk in the market is absolutely on fire. So US equities, both S&P and NASDAQ, interestingly, before Easter had actually bottomed on what was going on in the war. S&P bottomed down towards 6,300, and in the preceding days and up to D-Day, S&P was actually trading at almost 1 month highs. So the equity market really seemed to think that this outcome was going to happen, that they were not scared about this, and that Trump would taco, or that there would be some sort of deal made. And that equity market was right. So now we've got S&P, NASDAQ up well over 2% in early trading since the market's closed. And S&P now is pushing back up to 6,800. So that is only 200 points away from record highs. Absolutely unbelievable. So it wouldn't take much to get us back up to those record highs, or even make new record highs. So no, look, I would not be selling equities into this rally at the moment. What could take equities up towards those record highs is obviously crude. Crude was not like equities yesterday. Crude was actually trading bid going into D-Day. Crude last night actually went back up and tested the record highs that, well, not the record highs, but the highs that we made since the war began, which is around about that $120 mark. So we went as high as 117.50. Crude oil now has been smashed all the way back sub 100, that psychological level, and down towards the $90 level. So trading at about $92 lows at the moment for the day. So it's an unbelievable crash in crude, almost $30 so far from the highs overnight in less than 12 hours. But look, one of the things about what's happened, even with the Strait of Hormuz open, obviously there has been lots of supply disruptions, and that is going to probably keep crude from going back anywhere near the levels pre the war, when it was trading just under $60. So I think that potentially, yes, we can continue to see crude lower, but I'd be surprised if we do go sub $80 in the short term. But in any case, as far as risk is concerned, what crude is doing at the moment is a massive relief for the market. And obviously, the lower the crude goes, the more of a relief and the more of that risk is going to rally. So keep an eye on what crude is doing, but obviously we're seeing some big volatility and a big sell-off on the back of these very constructive and positive headlines. Bond yields. I haven't seen the bond market reopen yet here in Asia, but before it closed, we had US 2-year yields down at 3.8%. So that's 20 basis points off the highs at the height of the war at 4%. And 10-year yields trading down towards about 330. The highs, 4 4.3%. The highs that we made, so they're 20 basis points off the highs that we made during the war, which is around about that 4.5%. And that 4.5% in these US 10 years was certainly a line in the sand for a lot of the market that if we went above, that obviously it would have a huge effect on markets and risk in general. So what they're doing, being 20 basis points lower going into these headlines, is obviously hugely positive. No doubt when they reopen, we're going to see those lower again. So the lower those bond yields go, it's again going to be another benefit for risk. So watch that market as well. The currency market, the US dollar was basically trading at multi-year lows pre the war. So DXY was broke 96 and was on its way to 95. It was one of the biggest currency trades for the market, being short USD. War started, market went straight back into the safe haven USD, and dollar index went back up towards basically 100 plus, which has been the highs for the dollar index over the course of the last year. But obviously now positive signs that the war is over with the ceasefire, etc. Market is selling the USD again, and we're seeing the dollar index fail at that 100 level again. One of the standouts is Aussie. Aussie's a risk currency. So Aussie's back above 70 cents, pushing back up towards almost 71. The 2-year high for Aussie is up around that 71.70. RBA's got the highest cash rate now of major central banks globally. So I'd imagine this continues. Keep it simple, just buy Aussie. It's going to work. And the other currency that certainly the Japanese will be cheering, dollar yen was pushing back up towards the 160 plus levels, and so now that obviously they're going to get some relief with bond yields lower and the USD offered, and so now we're seeing a retreat from those levels, which are literally 40-year highs for dollar yen. So no doubt the Japanese are cheering too, and potentially that's another short that definitely recommend in light of what's happened. So it seems like those 160 levels, once again, have provided very reliable and stiff resistance. As far as precious metals are concerned, they pretty much traded as risk assets during the war. So that when the US dollar went bid and bond yields went up, and the rest of the risk assets were getting sold across the board, precious metals went with them, and sometimes they went down aggressively. But now that we're getting a turnaround in the US dollar, turnaround in yields, it seems like that precious metal bid is back in a big way. We've got gold back above $4,800 as we speak now. So certainly it looks as if the outlook again for precious metals is back on the bid side. In any case, look, these are huge, positive, tangible developments that we're seeing, and there's a very good chance that this war is over, and we should get confirmation in the next couple of weeks. And so, yes, risk is back in a very happy place. I would not be fading any of these moves anytime soon. Anyway, good luck with your trades.